Today I would like to analyze Novo Nordisk because this company had a significant stock price drop in the last 6 months, close to 42%. And this company is one of the major companies in pharmaceuticals. We can see here they are on the third place about the market cap, the third biggest company in the world. And this company is famous for diabetes care medication and even other pharmaceutical products. So it's an interesting company. We're going to take a look at the financials to find out if this company is undervalued right now. The first thing we can recognize is the market cap around 2.67 trillion crowns, which equals around 350 billion US dollar. This is the shares outstanding multiplied with the current stock price. And I would say it's already a huge company which can make the growth in the future more difficult. And we have a dividend yield around 1.72%, which we can see here. It did grow a lot in the future already. They continue to grow in the dividend many years in a row. And now we're going to take a look at the financials. We would like to see the revenue growth in the last 5 years because we want to invest in a growing business and not a declining business. So we can see here in 2020, they had around 4% revenue growth, then close to 11%, then close to 25%, and then 31%, which is quite good actually. So it's a check here. They have a good revenue growth in the last 5 years. The next thing we are looking for is free cash flow growth in the last 5 years. We want to have the free cash flow growing because the free cash flow can be used to pay the debt, to pay the dividend, to pay the stock buybacks, or to invest in the business. So it's a very important number. We can see here in 2019, it was around 37.87 billion. Then we have a 21% growth, 5% growth, 37% growth, and then again, 24% growth, which is incredible, I would say. It's a very strong free cash flow growth in the last 5 years. So it's a check here. The next thing we are looking for is free cash flow yield over 4%. So this also tells us about the valuation of this company. If it's under 4%, it could mean the company is overvalued right now. So what we're going to do is we're going to take the free cash flow in 2023, around 83 billion. And then we're going to divide it with the market cap. We need to use the crowns here. And then we're going to get the free cash flow yield. Okay, it's around 0.0311. And yeah, so around 3.11%, which is quite good, I would say. It's under 4%, but we have to consider this company could grow the free cash flow many years in a row. So this is not a bad number. It's still not a check here, but it's a good number if they can keep growing the free cash flow. And we can see as well, they can pay the dividend with the free cash flow. Here, just 1.72%, so they have enough free cash flow to pay the dividend. We can see it here as well, cash dividend paid, 31 billion. Yeah, so it's all right about this. The next thing we are looking for is debt to free cash flow ratio under 5. So this means the company can pay back the debt with the free cash flow in under 5 years. This is a very important number because if a company cannot pay the debt, they can risk to go bankrupt, and we don't want to see that. So what we're going to do now is we're going to take a look at the short-term debt first. Here we can see 6.48. Then we're going to take a look at the long-term debt as well. We can see here 20.53. And then we're going to divide it with the free cash flow that we had. Then we're going to get the debt to free cash flow ratio. So what we're going to get is 0.325. So which means in under 1 year, we can pay back the debt with our free cash flow. This is a really good number actually. And it's a check here. We can also take a look at the cash on hand. So how much money this company has in the bank. We can see here 30 billion. and that's a very good number. It's actually higher than the debt, so because they can pay back the debt with this, or they can invest in the business, pay the dividend, or make stock buybacks. So it's a really good balance sheet, I would say. So the next thing I'm looking for is shares outstanding decrease. This means the company buys back their own shares. This can be good, especially if we think the company is undervalued, so this can help the stock price to increase. We can see here, it's just in 2024, it's decreased around 0.55%. This is quite good. So they did buy back their own shares in 2024. But we're going to take a look here as well. Repurchase of common and preferred stock. So we can see here they did buy back their own shares many years in a row. And they actually did increase the buybacks. So this is looking good. It's a check here for me. I would like to give my conclusion about this company. So let's start with the positive. They have a good revenue growth in the last 5 years. They have a very good free cash flow growth in the last 5 years. The balance sheet is looking good as well. Low amount of debt and good amount of cash on hand. The free cash flow yield around 3.11% is not bad. And if the free cash flow grows in the next years, it actually can look undervalued right now. What I think is difficult is a difficult business. And I think it's difficult to understand pharmaceutical if you're not really in this industry. And it also has some risk about this company getting sued if some product have a bad effect on the people. So this is something to keep in mind as well. But if you believe in this company, the financials look quite good in my eyes.